Dilip Bhat, Joint Managing Director at Prabhudas Lilladher, is joining us right now. Mr. Bhat, good morning. Good to have you here. Now, this 2% up, 2% down, 2%. It's kind of getting difficult to keep count. Are we up? Are we down? But it's out of the 7 trading sessions today included, we've had 5 instances of 2% moves now.
Good morning. I think what you have summed it up very well. I think in that 7 sessions, what we have seen more of downs than of ups. So, the entire scenario right now is one of sell on the rise. And the volatility has also gone up very significantly. And my own take about the entire thing is that maybe let this May get over, maybe middle of June also, by which time most of the results would be out. And more important, what people know that the fourth quarter results are not going to be good. But more important, what is the commentary about the lackluster first and second quarter, and beyond that, what does the management feel? So I think people are waiting for those things to pan out. And the other part, of course, is that the FIIs have been a very aggressive seller in the last fortnight or so. And the gradual accumulation being done by the domestic fund is hardly helping the matters. So overall, I still feel that markets possibly will spend some time sideways. Whether it can go down from here further, 7,700, 800, I think it's very much possible on the radar. It's not impossible. Because the sheen at the moment seems to be off the market in terms of the overall optimism. But yes, the undercurrent optimism still remains. So I, for one, would be very cautious from the current levels, would wait, will not be in a hurry to buy. Of course, I think for next 1.5 years, it's going to be good. But in the immediate short term, I would really bide my time to think about really buying very aggressively.
What would you, so let's just be a little specific. What would you do, Mr. Bhat, right now? And where? In which parts of the market?
Well, as what I said, this market, at least in the short run, will remain sell on rise markets. And I think people will increasingly keep on questioning the expensive valuations. Because what we have seen is there's a downgrade.
When I said what would you do, I didn't mean what would you buy, but where would you look to trim profits, take profits?
Well, I think it will be. I'm not very familiar with the short-term kind of things, because I really try to look on a long-term basis, which is what I would look at. But I think just to answer your questions, I think in the short run there are quite a few stocks in the front line, whether it is FMCG, whether it is pharma. Some of them have really moved up quite a bit. So they will come under increasing pressure in terms of, say, a short-term kind of a sell-off, which probably has happened in a lot of the sectors across the indices, and possibly that kind of pressure possibly may continue in case if the markets were to rise. So there is nothing very specific about 1 or 2 sectors, because if you were to just take out the cyclicals, and if you were to take only a few of the top companies, the valuations are very exorbitantly expensive. So my own take is that you need to buy this. You need to buy the stocks, but not now, on a gradual basis. At the moment, I would prefer to stay out of the markets.
Prefer to stay out of the market. Okay. So you think we'll get better prices, right? I mean, across the board, and the correction will be felt in quality names as well, because that's been one refrain from many, that the market may be down 10-11%. But stocks that you really want to buy, you've not been able to buy because they've been expensive. They haven't really corrected that much. You think that will happen?
Well, what I'm trying to say is that I will wait for a time-wise correction. So I will look into the markets maybe by middle of June. So any rise in the indices I would think that if one is a short-term trader, one should try to encash it. And I would, as what I said, 7,700, 800 possible. Yes, it's very much possible over next 1.5 to 2 months. Not impossible. So what I would say is that when the market corrects by about another 300, 400 points, I think you will see selling across the sectors. And the next round of buying, as what we understand, maybe people will be a lot more will have a lot more discriminating approach rather than trying to buy on a basket basis.
Okay. Do you think, so this is just the near term. You're saying that by June, this time-wise correction could come to an end, could come to a halt. What are the chances that, let's take one example, right? Havells reported numbers yesterday. I'm just using Havells as an example. If you look at the details in the numbers, the domestic growth, domestic business sales growth for Havells in the second half of fiscal 15 was 4%. The same number in the first half was 19%. 19% domestic sales growth for Havells became 4% in the second half. And that's a consumer company, right? It doesn't suggest growth isn't picking up. It suggests that growth really came off very, very sharply. Now, that's just one company, and you can say, well, that doesn't hold true for the broader consumer demand. But there are other data points as well. What I'm trying to understand is this belief that it's a short-term hiccup. Nobody really doubts whether growth is going to come back because it will come back. Should we doubt that for 1 minute, or you think not?
Well, a couple of things on what you said. I think the 4% growth which you said is also mirrored by the fact that 1 year after the new government is in place, and whatever GDP growth that we are still talking about, the credit growth, I understand, has been the lowest in the last 18 years. So if that is the case, that means the recovery, if at all, is only getting postponed. So that is really not happening. So when you said only 4% domestic growth as compared to 19%, I think that is very adequately reflected even in the credit growth. So all what we are trying to say is this credit overall recovery will happen. I'm sure it will happen sooner than later. We are all very optimistic and bullish in the long run, but I think the short-term pains possibly will continue, and that's what I told you, that till June 15, most of the results will be out, and most of the commentaries of the management also will be available as to how they see the current 2 quarters, first and second quarter of the new of FY 15-16, and possibly whether they sense some kind of recovery in the third or the fourth quarter. These are some of the clues that that people will be talking about. But not to forget that the interest rates in all probability is heading southwards. So that is a big positive for the markets. So if not for anything, at least for the interest reason factor, which will give a good boost to the market, will not allow the markets to really slide in a big way, and probably will give an opportunity for you to buy.
Got that. Thank you very much, Mr. Bhat. Good speaking with you. Appreciate you coming in with that perspective this morning, sir. Thanks indeed. Take a quick break.